Hi, I'm Rick Albert, and welcome to The Key to the City of Angels, the podcast where we unlock the secrets of Los Angeles real estate. With over 300 real estate deals under my belt, I've seen it all, from house hacking strategies that build wealth to helping clients close multi-million-dollar deals in one of the most competitive markets in the world. Every week, I'll bring you expert insights, market trends, and inspiring success stories to help you navigate the LA real estate scene. Whether you're a first-time buyer, an investor, or just curious about what it takes to thrive in the City of Angels, this podcast is your guide to making smarter decisions and achieving your goals. So grab your keys. It's time to unlock your path to prosperity in Los Angeles real estate. Hello everyone, Rick Albert here with another episode of The Key to the City of Angels. I'm super excited to bring on someone that I've actually known for a while, Howard Gilden. How are you?
I'm good. I'm good. How about you?
Yeah, I'm doing well, trying to keep busy.
Yeah.
You work with WFG National Title. We use you guys for most of our title stuff and even on the escrow side. So, first of all, how did you get into this space? And then we'll kind of go into what title is.
How to get into title?
Well, first talk about how you got into the business.
Oh, I got in actually because I met someone that was doing title insurance and kind of explained it to me, but I was already doing something else. I used to actually sell back in the old days pagers and cell phones, but
Oh,
cell
okay.
phones from like the movie Wall Street, the big monster.
Right. My dad had one of those.
Yeah, and funny thing is that one title company I sold all the pagers to because everybody had pagers, nobody really had phones.
Yeah.
And when I was done selling them on why they should get pagers for all their reps from us, at the end they actually asked me if I thought about maybe getting into title. And I said, no, I'm already doing, I'm good with this, you know.
Hmm.
But I sold them a lot of pagers, so I thought about it. And then I had friends that were lenders, and they would say to me, you're kind of like, your personality is kind of like the guys that come in our office, guys and girls that do title insurance. You would actually
Hmm.
be pretty good at this. I go, yeah, somebody else I just sold pagers to, they just mentioned it to me. So, anyways, I got referred and went to a couple interviews with some title companies. I looked into it and I ended up just, trying it 36 years ago. And here I am
Just tried
today.
it for 36 years. It's been a hobby this whole time, is what you're
Yeah. I
saying.
got in it not really knowing much about it, but I got in it, and a lot of it was just figuring it out as it goes and learning it as it goes, and I think I had the personality to go in and meet people, and it just eventually worked out for me.
Yeah, so your role is very like forward facing, right? You do more like meeting with the loan officers, real estate agents, the escrow offices, even if they don't have a title division, that sort of deal, right? You're much more forward facing versus the actual title officer or escrow officer that's behind the scenes.
Yeah. So what I'm doing is, so what they look for the reps is they want someone that can, get along with, like, go into random real estate offices, escrows, lenders, like you
Hmm.
said. And they're already all using somebody like me. So how am I going to get them to switch over to me? They already have a
Mm.
title rep or several
Yeah.
title reps. So it's sometimes it's timing, it's personality, it's maybe you have something to offer that uh, technology wise or something that the other companies don't have. And there's all these different ways to try to get business. Sometimes it just takes time,
Yeah.
waiting for the one guy to get out of the business or something. But yeah, over time, people start to, oh, they'll give you a try, and then if they like you and your company, then it just snowballs.
Yeah, it's almost like being a real estate agent, meeting people, except you're business to business. You're, B2B
Yeah,
more than really to the direct consumer. So, but let's
yeah.
kind of jump into what you are selling, title insurance. So what exactly is title insurance?
So title insurance is basically when you go to so title insurance is really for residential properties,
Hmm.
commercial properties, vacant land, so all of the above. And what it's doing is we're doing a search that's pointing out all the possibilities like liens and judgments and tax issues and all the different things that are on that property currently. So for example, on a purchase, if you're going to buy a home, you want to make sure that everything is, when you buy the house, it's free and clear. So
Hmm.
if some issues do come up, the previous or the current owner needs to take care of those, right? Needs to get rid of the take, pay off the liens or judgments, whatever he needs to do. So when you take on the property, you don't have any of the previous owner's issues.
Hmm.
So you're buying it basically free and clear. So we're ensuring that that happens when you buy the house. Uh, and that's why mostly lenders, in general, lenders will want you to have a title policy because they want that stability too before they loan somebody money to buy a house.
Which makes sense, right? Because if, for lenders, it's all about risk. So if the borrower defaults, now goes into foreclosure, they don't want to be on, they already have to deal with this loan. They don't want to be on the hook with,
Right,
hey, Joe Schmo handyman put a lien on the house for 10 grand.
right,
I got to pay that off too now.
right. And title insurance has never been mandatory.
Hmm.
But it's so recommended because it's a one-time fee. So it's not like like other insurance companies that you pay
Hmm.
monthly. So you pay it when you refinance or when you buy a property or when you
Right.
sell a property, basically. So
So transfer of ownership.
yeah, and that's the only time you have to pay, which is good.
Hmm.
But the protection it comes with for that one-time payment is worth it. And you know, people sometimes don't even know, for example, I'll give you an example. So, say, for example, your father was going to give you his home or sell you his home,
Hmm.
and it's your father, and you trust him, and everything's on the up and up with him. So, you figure, well, what do I need to pay title insurance for? It's coming straight from my dad, and I know
Hmm.
that he's not trying to pull something over on me. And it isn't so much that he's trying to pull something over on you, but what if he didn't know he had X amount of liens or judgments put on
Hmm.
on him and his property, and you just take the property, whether you buy it or he gifts it to you or whatever. Now you're taking on all that liability, all those issues now go to you. So if you had title insurance, we would have pointed it out ahead of time so that you could clear that up, so you don't have to deal with that. So you could end up taking on a huge headache, even if somebody gifted you their house without title
Yeah.
insurance. So
And the other issue, correct me if I'm wrong, is like it's also about timing, right? Because if using the dad example, it's like maybe he was having a dispute with the contractor and he thought it was resolved,
yeah,
and then it wasn't. And all of a sudden, I don't, is it difficult to put a lien on a property?
no. And on mechanics lien, you have a plumber come to your house,
Yeah.
for whatever reason he didn't pay him or he had some issue or whatever, he puts a lien on you and you got to clear that up.
And can you dispute it? Like, can you be like, no, I did pay this guy and
You,
he's
you,
doing it anyways?
you could dispute it, but once it's recorded, the problem seems to come up a lot where anybody can go down, like you hear these commercials, LifeLock and so on and so forth.
Sure.
These commercials where anybody can go down and take a document and record it. And basically they give it to the county recorder and they record it. And it
Hmm.
doesn't mean that it's a legitimate document, but they took it down there and they recorded it. Now it's recorded. So
Hmm.
even if it's not a valid deed, or even if it's a fraudulent deed, it got recorded. So sometimes you need to correct that. And that's an issue that comes up a lot, actually, too. So when title does their search, so when someone does that, that deed goes down and it's an uninsured deed.
Hmm.
It's an uninsured deed by title because we weren't involved, right? They just went down and recorded it. So what title does is when that client does their next refi or purchase, then when title's involved, they'll do the research and they'll see that that's an uninsured deed, but they'll insure it once they check that everything was done correctly.
Hmm.
And then it
I
becomes
almost wonder if like you kind of want to do a title search once every couple of years, like just to make sure there's no surprises. Or
yeah,
like,
yeah, yeah,
I mean, interesting enough, with our listings, we always order the preliminary title report
right,
even before we enter escrow,
right.
and I do it to include it with the offer so everyone's clear. But now thinking, I was like, we also do it to make sure shit hasn't hit the fan before we even list it.
Yeah, no,
I didn't even
it
think
really
about
happens
that.
a lot. Yeah, it's almost worth checking into once in a while. And I think that's where these other companies kind of figured that out and said, here, they set up a business around that model. But
Because nobody
definitely
thinks
a
to
good
check.
idea. Yeah.
Interesting. Yeah, I guess that makes sense. It's like, yeah, you might want to check before you do anything major, or
Yeah.
maybe after you do a major remodel, you get everything paid up, you understand everyone's like in agreement, but then maybe once in a while you do that title search just to make sure like shit hasn't hit the fan or someone's trying to pull a fast one on you.
Yeah. That's what's so important again about title insurance, because imagine you don't get title insurance, you're taking such a risk of the prior owner to everything that was on there. And even like I said, even with a refinance, right? Now on a
Hmm.
refinance, you're still the owner of the house, but before
Right.
the lender gives you money, he wants to make sure there's no issues. So it makes
Yeah.
sense all the way
Yeah.
around to get it.
Yeah, I remember years ago on the development side, we had flipped a house in Westchester, like by like LAX,
Yeah.
and someone came. It was a foreclosure. We bought it as a foreclosure, fixed it, put it on the market, and then someone came through saying, "You guys didn't buy this house lawfully. We were still on title, blah blah blah." I'm like, okay, and like I was still somewhat new to the business, so of course that kind of freaked me out. So then I went to one of the partners in the firm, John, and I told him, "He's like, well, that's why we have title insurance."
Right, right, right. Because at least you have some recourse. And in fact, here's another example. It doesn't happen often, but once in a while, we might miss something, right? And
Hmm.
so if we insure the property, but we missed something that we should have caught, you have some sort of recourse, at least with that title company. So,
Hmm.
because when we say it's free and clear, but if we miss something and it's not free and clear, now luckily you have title insurance for
Right.
that issue.
Could you get title insurance every year if you wanted to? There's really no reason not why you would, but for like the very reason of like maybe you're in the business of construction or whatever and you just don't want to take that risk. But I guess it doesn't really matter. It's more about just doing the title search.
Yeah, and you can only get title insurance again during a refinance or a purchase.
Got it.
So yeah, like I've had people contact me and say, "Hey, I want to record a grant deed, and I want to
Mhm.
grant deed this property to somebody. Uh,
Yeah.
and I want title insurance." And I'm like, well, the only time you can get it is during a transaction. So that's the deed I was talking about, that they can go down, record a grant deed. It's legitimate. It goes down as an uninsured deed. And then as soon as they do a refinance or they sell their house and title insurance then is involved, then that deed will become insured.
Got it. Okay. Now, what have you been seeing like in the LA County, Southern California area in terms of like, are you seeing more title orders coming in? Right? Because what's interesting about title is your hands are kind of involved in a lot of transactions versus lenders are involved in a lot of the transactions, but some are cash purchases. Like, what are you seeing in 2025?
As far as the market being
Yeah, like are you seeing like more title orders than maybe what you've seen in the past? Because there was definitely a slowdown when rates went up.
Yeah, and rates are still haven't really come down enough to get it really moving much. I mean, it seems like it's moving a little better this year than say last year, in my
Sure.
opinion.
Yeah,
Uh,
yeah, yeah.
but rates are still kind of where they're at, and the market when things are getting corrected, eventually it doesn't come down to our level right away. So
Yeah. Hmm.
rates, even when they sometimes say rates have come down, it doesn't always mean it came down to the public. It takes a
Mm,
while
right.
before you actually can take advantage of a lower rate. So a lot of times when people hear the rates came down, it doesn't really mean the rates came down for them for real estate purposes.
Right.
Not yet.
W- Yeah, and I know that some lenders also the rates will change in preparation of,
Right.
right? So when they're like, "Oh, the rates have dropped," like, yeah, no, they've already dropped. They've already factored that in.
Right, 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 right.
Yeah. So, but in general, are you seeing, because you guys do both refis and purchases, has that changed at all in terms of like, are you seeing more refis happening versus more purchases?
The refi market, a lot of that's obviously based on the rates. So the rates are still
Right.
kind of up there. The only thing I've seen in the refis that have picked up is a lot of hard money lenders are
Oh,
busy there.
interesting.
And I think it's because the hard money rates used to always be much higher than the residential rates. And
Hmm.
now they're not that far off. So, a lot of people will now go to hard money lenders because it's easier to get loans. And
Right.
I think that's been happening. So I've noticed that for at least for my business, the refis in general have picked up more from hard money lenders as opposed to,
Oh.
yeah, just regular lenders.
I understand they're easier to get, but
Yeah.
they typically higher in points. They're usually a shorter term, right? There's usually a balloon payment after so many months or
Right.
years. Be interesting to see what kind of properties are getting the hard money loans and what they're using the money for.
It seems too like people lately seem to only be refinancing, even kind of buying and selling out of necessity. Like
Hmm.
they refinance now because they need the money, not so much because of a low rate or some other reason. They're buy their house, they're selling their house because more out of there's a need for that. Like they need to do it. Uh,
Hmm.
when the rates are low or when prices change on residential sales, that's when people start to, the market starts to get more, everybody's sort of involved. So right now it
Right.
seems like just the people that really are in need are sort of doing it more than when it's, hey, there's an incentive like rates are low or prices are low or something.
It's interesting. That's what I was saying about this year back in like January or December. People are like, well, what do you think about 2025? And I said, look, I think we're gonna end up in like kind of like the two categories. You have the buyers and sellers who have to sell out of necessity,
Yeah,
right? Job relocation, families growing, the divorce, death, whatever, usual stuff. But then we might see it's going to be a smaller market, but we're going to see the lifestyle market where, like for myself, right? Like our house is fine for us,
right,
right? I don't need to sell, I don't need to buy, but if we choose to buy, it's going to be because maybe we want a different location, maybe we want a pool, and it just makes more sense to buy a house with a pool. Like that sort of deal. Because the biggest thing I hear is like, well, I don't want to sell my house because I have such a low interest rate.
right.
And I told somebody, I was like, well, that's like, who cares? Like, it's all about what you can afford. And like, you shouldn't feel locked into a lifestyle you don't want just because
Yeah.
of the rate, if you can afford a higher rate,
You know
right?
that old saying, the old saying they used to say, you're dating the rate, but you're marrying the house.
Right, exactly, right?
Rates temporary and it's the house is more permanent, so they kind of, if you look at it that way, yeah, it's kind of, that's a good way to kind of look at it, I guess, is the rates eventually it'll all sort of balance out. So I wouldn't, because if the rates go down, then more people are going to start buying, and the house that you're interested in you're not going to get. Like if you
Right.
found a house you liked, now you have an opportunity to get it because there's not a lot of people going after that house. So the rates might be higher, but you'll get the house. If you wait until the rates go down, now you got a pool of people going after that same house. You'll probably lose out on that house. So you have to think about it that way too.
And you can just refi.
And you can refi later, yeah.
Yeah.
Because
It's funny
again,
'cause
you're marrying the house.
yeah, and it's funny because what I told people, I told them the same thing, but I said, the challenge becomes even if rates drop, and if they're, I don't mean it would have to drop significantly to get back to the bidding wars in 2021, but let's say weird scenario where that happens, your
Yeah.
payments are actually going to be the same because you had to pay so much more.
Right, right, right. You might get a
Like,
better deal right now too.
I have clients where we're asking for concessions to lower the interest rate, buying down the points.
Yeah. Yeah,
Because,
when things are booming, there's more people going after that same house. So really, you have to think about it that way. Like your pool of people going after it now is less. So if you really want the house, you shouldn't avoid getting it because the rates are high today. Because you
right.
can't base it on that. If you wait for the perfect storm,
So is
everybody,
everybody else.
yeah, so is everybody else.
It's what I've noticed because I know people like I know someone for example for years I was trying to get him to buy.
Yeah,
Oh, I've been told by so and so the market's gonna crash. Oh, I've been told by this. Oh, I've been told by that. I'm like, okay, I here's all the data that says otherwise, but
right,
okay. Because Southern California is unique in the sense of we don't have enough land to build,
right.
right? And then what I've noticed with those types of people is either A, they don't buy or they end up buying and get a really crappy deal.
Yeah.
and they just don't realize like that person I used as an example, he ended up working with a different realtor because that realtor was willing to offer, he was like a buddy of his, he was willing to offer up half his commission. I'm like, yeah, I'm not doing that. Have fun. And it ended up biting him in the ass. He realized that and actually apologized to me because he bought a house with a really high interest rate
Oh,
and wasn't fitting with his goals. And I'm like, dude, why did you buy this? He wanted to build an ADU in the back
right,
and the lot was sloped. And I'm like, didn't your realtor tell you you're going to need caissons, right? Because it's not flat land, and he didn't factor that in. I'm like,
right,
congrats, it just cost you, tens of thousands of dollars more to build the same thing.
right.
Yeah,
You
ta-da.
know, another thing too is like another factor that causes people to buy, sell, whatever is
Yeah,
change of life stuff. Like they had a
right,
baby, or somebody passed away, or something happens in their life that says, okay, now either I need to downsize or I need a bigger house.
right. And in some cases, what I was seeing for a long time when I was talking to different lenders was a lot of HELOCs, right? Because with the HELOCs, they can do the addition on their house because it was cheaper to do that. But now with cost of construction climbing, right, with tariffs and all that, it's like, no, you can buy it, you can build a pool for like 75 grand to 100 grand, or go buy a house that already has a pool. And at this point, it might make more sense to buy one that already has it, especially if you also need a bigger house, you need all these different amenities.
Because it's so expensive now to add to like you said, the building costs have gone way up. So you
Yeah.
think, 10 years ago, the price you could have built a pool for an addition or something today is much higher. So
Oh yeah.
yeah, it probably is better to try to find some houses that already have that there, unless you get that
Yeah.
good of a price on it.
Exactly. Well, the easy example is the ADUs.
Yeah,
It cost me about, I have to take a look at the numbers. It probably cost us about 75,000 to convert the garage to an ADU. This
yeah,
was like 2018 to 2019. Now it costs about 150 to do
yeah.
the
I was gonna
same
say, I
exact
bet it's
thing.
twice as much almost. Yeah,
Yeah. Yeah, and part of that is cost of construction. Part of it's also building codes change.
right.
It was funny because like when I bought my house, the plan was to connect the sewer line from the ADU to the main house, which was
Right.
like, I don't know, 6 feet or so, right?
Yeah,
Because it's not that far. That was like 3 grand. Then all of a sudden we close, and the sewer company's like, no, they changed the guidelines. You have to go down your driveway and then connect in your front yard. So it
yeah,
went from like 3 grand to 7 grand. Now that would cost 20 grand. But the point being is like codes change all the time to where that can just increase the cost.
yeah, yeah. Everything's gone up in cost.
Oh yeah. So one question I do have, because you talk to a lot more real estate professionals than I do. That's what makes your profession kind of like unique, is like you talk to more lenders than I do, real estate agents, all of that. What are they telling you when you're reaching out and asking, hey, how are things?
Kind of the way we're talking right now. I mean, in general, it depends. That some of the seasoned agents that have been out there forever,
Yeah,
they always seem to have deals going.
stuff going.
Yeah, and the people have been doing it only for a couple of years. It's tough. They have to. I think what's always worked for me that I think works for some of them, but I always say, you know, technology's great and you want to always jump on the new stuff. A lot of this AI stuff that's going on right now is great.
Hmm.
But you can't stop doing the old school stuff, I think. Just people don't even pick up the phone anymore these days. And I think that sometimes that's a good thing to pick up the phone once in a while and try to call people, which I do,
Hmm.
besides texting, emailing, and visiting and so on and so forth. But just staying in front of them besides an email or a text. And everyone's busy, I get it, but I think that the old stuff, the old system used to work too.
It was funny. I in a previous episode, I had interviewed Sean Purcell. He's a real estate coach,
Oh
and I had
yeah,
actually talked to him recently. And I said, "Hey, have you been seeing any kind of like new ways to generate business, right?
yeah,
Because like it is getting harder. I will say, I'm having to work 2 to 3 times harder now than I did in the past."
right,
And he's like, honestly, it's the same stuff.
yeah,
It's you pick up the phone. It's the sphere of influence. Like he's like, honestly, none of it's changed.
right,
You might have to make a few more calls,
yeah,
but
yeah.
conceptually, there's no unique method that's changed the market.
The only new thing that's come along is AI, and that's
That's
helping
an
people.
efficiency thing. That's not a
It's
lead
efficient,
generation thing.
Right, that's an efficiency thing. And like I was saying, if you go back to even what we talked about when you asked me how I got in the business and how I started, when I
Yeah.
go visit people and meet people. So like I mean, people tend to like to like that you stay in contact more face to face, at least once in a while. Um,
Yeah.
Technology has sort of taken that away, and I think that technology should assist you, but you shouldn't
Hmm.
let that go because that's definitely the key to how I've uh, increased my business is I've kind of stayed in touch with people more on a face-to-face thing too.
Yeah, I've noticed that as well, which is why I started doing a lot more like equity reviews where like I meet with my past clients and
Yeah,
say, this is what your house is worth today, this is what it would rent for. I'm not saying you should sell. These are not listing presentations. This is a you see your doctor once a year for a physical. Here we are doing a physical of your house.
right,
But I always meet in person
right.
if at all possible. I have some clients that have moved out of state, but they still have properties here. But
Yeah,
that's it was like, hey, let's go meet over coffee, right? Because I'm sure unless your house has changed dramatically, I don't necessarily need to see it again.
yeah,
But it allows me to be in front of these people, and then we can have the honest, candid conversation. Should we sell? Should we keep it?
yeah.
And we are in a business where we have to ask for referrals because some people just don't think about it as much,
Yeah, and you're setting it up for they might not be ready today, but you
right?
now had the conversation. So when they're ready, then they're going to come back to you.
Yeah, exactly. So based on the title orders coming in, based on the people you're talking to, we're filming this in May, towards the end of May. Where do you think is going to happen for the next like 6-ish months? Like, do you think it's going to be kind of the same what's been going on? What do you think? This is all predictions.
I know. I think things are starting to improve now that we're coming into the summer. That's a good time
Yeah.
where people really start looking around. The holidays and you get towards the end of the year, people get in a different mode. But right now, we're coming into summer. So
Yeah.
it should get a little more active coming up. Just the fact that people, there's no there was a lot of world problems, obviously, a couple of years ago
Right.
with all these things, and now I think things have kind of calmed down, and people are sort of getting back to, okay, let me go back to summertime. I can look at some homes, see if we have any interest, see if we find something we like. So I think people are just looking around more, and the summer's always a little bit better than say the winter or beginning of the year, in my opinion.
Yeah, I tend to think that, whatever we want to, because it is a weird market right now. Like, it's weird because, like, last I looked, the average days on market for LA County was 17 days. But then I'm like, why am I seeing all these homes sitting on the market then? Like, I'm not seeing that correlation, but I'm like, well, the stats are what the stats are. So
Yeah,
they're probably I mean, it's LA County. That's massive,
yeah,
right? I just talked to a buyer this morning who's working with another agent, but she's shopping around and she's writing offers on properties that have 19 offers
right.
here in the valley. And I'm like, and then I had to think about why. And she's looking at big lots, all that.
Yeah.
I tend to agree. I think things are picking up because we're starting to get into that lifestyle mode.
Yeah.
But I think we're going to go really into the new normal next year, is my hunch. Because by then, anyone who bought with these higher interest rates in 2022 are going to be used to that shift. It's not
Right.
going to be as big of its sticker shock.
That's what I was thinking too. I think a lot of things are happening now that will catch up. It'll catch up to our industry towards the beginning of next year.
Yeah.
But I still think this summer should be better than let's say last summer. I have a feeling
Hmm.
that things have just in general, it just feels like people are more okay now. I'll look around at homes. I'll see what's out there. And nobody really likes when that bidding war was going on. Like you remember before, where
Yeah.
yeah, people are bidding over the asking price, and it just got out of control. That's not really happening so much now, but there was a time
Yeah.
when yeah, you're overbidding on all these homes, and people were going crazy. Now it's more they've calmed down and things have gotten more level. And I think now's a good time to start looking.
I agree. 2021 was a great year. It was one of my best years on record. I mean, it was the best year for many people.
Yeah,
But like, I mean, I got f- the I don't I always price my properties. I always try to kind of at market. I try to go a little bit below market to get interest. But there was one property I got 15 offers. I'm like, yay for my seller.
Yeah.
But on the flip side, I'm like, this is also way more paperwork. Like I'd be happy with like 2 to 5.
Yeah. 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 You just want some, make sure that they're qualified buyers and, maybe some of them
Yeah, and
are.
it's a good price, good terms. We all move on,
Yeah. Yeah.
you know? Um, but yeah, I think that it's this new normal. Yeah, I agree. I think this summer is gonna be better than last summer for
Yeah.
sure. And I think it's just people are just they've come to grips. They've had their come to Jesus moment that like, look, these rates are what they are.
Right.
I have to work within this confine. So either got to get creative or I have to suck it up,
Right.
And some of these sellers are not budging on price.
Yeah. And every month there's a holiday or something, you can always look at, well, it wasn't busy because it was 4th of July or it was whatever. I mean, you can look at it that way, but I think that putting that all aside, this summer I think will be better. It's last year was like an election year, and so that's over with
Sure.
now. So I think now people are more like, there's nothing really in the way. Like now you can kind of focus on looking at homes again, like they were doing in the past.
Uh, you know, you brought up the election. That's actually a super interesting point because I actually was hearing a lot of that. There were people, I remember I had a listing last year and we just were struggling to get it sold. We eventually got it sold this year.
Yeah,
Um, but part of it was people are like, well, we don't know who's going to win the election,
right.
depending on who, because people don't realize like what happens at that high of a level,
Yeah,
it takes either a while to trickle down to your daily life or it actually doesn't affect your daily life
yeah, yeah,
in a lot of cases. Most of the time, what I tell people, and it'd be interesting to get your thoughts, like it almost doesn't matter what happens in politics. It all comes down to job security.
right,
If you're comfortable with your job, go buy,
right.
you know. And obviously there's exceptions. The tariffs have shaken stuff up. I know people who work in fashion that they're like, we may lose our jobs because they have to cut back because they can't, they're already dropping styles.
Right.
Or the federal workers. I had a client who worked for the government and we had to put his search on hold because he's like, I don't know if I'm going to have a job.
Yeah, people panic. I mean, like the stock market, the stock market goes down. Some people get nervous and they sell, sell, sell. Some people sit tight and because they have a good feeling it's going to come back. And so it's kind of like that too. It's like you can wait around for things to happen, but that's kind of a good comparison, really, because like you were saying earlier, if you wait for the rates to come down, you might not get the house you want. Or if like again with the stock market, like, if you wait it out, it might come back, it might not. And so you don't want to, you don't want to do things really based on certain items. If you're ready to get that house, and even if the rates are a little bit on the higher side, just know that you can always adjust that later. But don't
Hmm.
forego the house because that's the house that's your dream house, and if you don't get it now, someone else is gonna get it.
Well, I think that's interesting. So most of the time we have to coach our clients, say, don't worry about your dream house. Now we can actually say, think about your dream house.
Yeah,
Because they're sitting. Like the buyer I spoke to earlier today, who is working with another agent, but she might switch. She was telling me, she's like, "This is what I'm looking for. I can't find it." And I'm like, "She's looking in the valley." I'm like, "Well, have you considered Simi Valley?"
yeah,
Right? And I'm like, "Here's a property that meets 100% of your criteria, and guess what? It's sitting on the market.
yeah,
No one's touched this.
yeah.
It is yours for the taking."
And it's really not that far from the valley. They
It's a
just aren't
15
looking
minute
over there.
drive from her office.
Yeah, they
It
just
just she was looking in the wrong direction,
yeah, exactly.
right? And I think that'll also be interesting from a real estate industry perspective, right? Because we had all these agents sign on board in 2020, right? They were in quarantine, they wanted to find a new career. Then
Yeah,
2021 happened where like all you had to do was breathe and you did really well.
right.
But then 2022 hit, 23, 24, and then you realize, oh shit, I gotta work.
Yeah,
Um, and so I'm thinking, and I know you talk to more agents than I do. Um, I think we're gonna see more drop off. I think the drop off is gonna continue for the next like year or two before things settle. When these agents are realizing, oh shit, I gotta pick up the phone.
right, right, right. They're like it's not gonna just fall in your lap. You gotta, go
Yeah.
after it.
and I even have to get out of my head sometimes, but I saw, I forgot where it was, some social media platform, and they're like, has the market slowed down or have you slowed down? Right? Because you're right, the top producing agents, they're just gaining more market share.
Right.
That's all they're really doing. And honestly, in some ways, good for them,
Right.
right? I mean, I think we need less agents doing more volume.
Here's another kind of funny example I used to give when I go to offices, and people ask me all the time what's going on out there, right? And it really
Hmm.
depends on which person I'm talking to. But I used to give an example that, like, say I go into an office and they had 10 orders a month and they had
Hmm.
five of us coming in. So they would
Hmm.
split it up. So we each get two, right?
Hmm.
That's when they were busy. So now I'm the only one really coming around. The other guys just kind of,
Because
burnt
they
out or
assume they
whatever.
got the business.
Right. So the guy is really slow. He only has two orders now. He used to have 10, but he gives the two to me. That's all I got when he was busy, right? When
Oh, interesting.
so I kind of relate that to realtors and lenders. Like, that's the way you should think about it. Let your competition phase out. And as
Hmm.
long as you get the percentage of business you used to get when it was busy, that's all you're concerned about is how you're doing, right?
Hmm.
So if you continue to do, like I was saying, you just continue to do what you used to do to get you business, and don't listen to the negativity, and don't listen to people that say, oh, it's slow. And then they just, they kind of throw in the towel. You be the guy that just keeps going, saying, you know what, if I get all I want is my same percentage when it was busy. And so that example I'm giving you, if I get the same amount and the guy is slow, that means I can do well in a slow market because I'm still
Mm.
getting my percentage. So it's kind of,
Right. And if prices go up, you can do the
yeah,
same number of transactions and actually make more money.
yeah. So that it kind of relates to to you as a realtor, and even these sellers and buyers and whatever, is that when the market's fantastic, everybody's going to put their house on the market, right, to sell.
Right.
They want to make money. So now there's all these people scrambling everywhere, but percentage wise, as an agent, again, you could use my example. If you're trying to get listings on 20 homes, you get two of the listings, let's say, for some reason,
Hmm.
because they're divvying them up with all these other agents, and now
Yeah.
it's slow, and you're still getting your two listings. That's what you were doing when
Business
the
as
market
usual.
was great. Yeah. So you have to sort of think about it
It's
that way.
perspective.
Yeah.
Yeah. Okay. This has all been like super good info. And I really appreciate it. Is there anything people need to be aware of, whether it is about the housing market, because you are boots on the ground, whether it's about title, besides like, hey, get title insurance. But like, is there anything that viewers should or listeners should think about?
I mean, just know that, title insurance is definitely something you need to get when you buy and sell, because you need that extra protection. You don't want to take the risk. What one lien, one judgment that you take over from the previous owner, that could cost you more than the house.
And to be clear, it's a couple $1,000, right? It's not like this is like over the moon expensive.
Title insurance, yeah, is only it's only, yeah, a couple thousand at the most. It's not like a giant amount. It's based on the sale price.
Right.
Yeah, and on a sale, the seller pays the majority of title.
Yeah, I was
Um,
gonna say, I was gonna mention that too. It's like as a buyer, it doesn't really matter. So it's really more about these, I guess you call it off-market transactions, is where a lot of this could be, where that may be more negotiated or whatever the case may be.
yeah, the seller pays based on the sale amount, the buyer pays based on the loan amount, but it's a much smaller percentage. It's almost like an 80-20. It's like the seller
Yeah,
pays about 80 and the buyer pays about 20%. That's kind of,
no.
on average.
Okay, that makes sense. All right, well, Howard, thank you so much for coming on. How can people get a hold of you?
You can reach me. I'm at WFG National Title, and my office number is 818-476-4000.
Perfect. All right, well, Howard, thank you so much for being on the show. Thank you everyone for watching and listening, and I'll talk to you guys next week. Thanks for tuning in to The Key to the City of Angels. I hope you found today's episode helpful as you navigate the world of Los Angeles real estate. Whether you're looking to buy your first home, expand your investment portfolio, or sell in this competitive market, I'm here to help you succeed. Let's connect. Visit my website or follow me on social media to learn more about how I can help you achieve your real estate goals. And if you're ready to take the next step, don't hesitate to reach out. I'd love to work with you. If you've enjoyed this episode, be sure to subscribe, leave a review, and share it with someone who might benefit. Together, let's unlock your potential and make your real estate dreams a reality.